So as promised, we're going to review right now chart of accounts and ledger, right? And how's it used. So depending on your software, your chart of accounts might look slightly different, but the general structure, you would see some sort of account number and account name, right? There are more columns here. We're going to discuss it in separate videos. Also, there is the logic actually behind the account numbering. Again, we're going to discuss in a separate video. Right now, let's concentrate on chart of accounts and ledger and how it all came about. So before the invent of computers, obviously everyone had to record everything manually on paper. So the usual procedure would be every transaction would be recorded at least in two types of records, right? You would have a ledger, which is basically you're recording all of transactions. Doesn't matter what they are, cash, accounts receivable, inventory. You're recording them into one long ledger of all transactions. So you have a reference of everything that happened in a company during a given day, period, etc. Right? And for each account, you would have a separate book, right? So for example, for cash, you would have cash book. It would be literally a paper, obviously journal, and you would record here only transactions related to cash. What the end result was and why it was useful is I look at ledger, I see a transaction, for example, let's say vehicles, right, on September 6th, plus $10. I now can go to the book and see maybe there are more like details there. I can review all transactions about vehicles, related to vehicles in that one book. Instead of imagine going through, let's say, flipping through a paper book and here ledger and trying to figure out all the vehicle transactions, because obviously you cannot search it, right? So you have to literally eyeball it and find them, which is not feasible. The other concern is also, what if I don't want to show the ledger to someone? I just want them to analyze my inventory, and I don't want them to see what clients are paying me, etc. Right? Then I can only give them inventory book and limit their access completely to the ledger, right? So they never see actually the entire ledger. So obviously it was completely manual labor with a lot of errors. And also don't forget that depending on the size of the firm, they would also have separate books for clients, separate book for vendors, etc. So imagine, for example, if client paid me $200, I had to record it in the ledger. Then I had to record the cash in the, let's assume right now, no other account was affected, right? And client gave me $200. It would be, the ledger, the cash account, book, and then I have to go to client book and record that he gave me $200, right? And if it's accounts receivable, obviously, if he pays paying for invoice, then I have to go to accounts receivable. So a separate book, right? So you can see how it's becoming complicated very quickly. So speaking of a lot of books, imagine for a second if we take all of my, cash book, accounts receivable, inventory, software, vehicles, etc., right, and put it all as a stack with names written out horizontally, like so, right? So what does it remind you of? So of course, it's if you look at it now, it becomes clear that this is actually every single line here before computers was an actual physical paper book, right? And that's all the chart accounts is. They're just books stacked up, each dedicated to a separate account, right? So now the question is, what about the ledger, right? So if you remember when I was explaining this part, I said that they were first recording it, the daily transactions and then recording separately in the cash book, let's say, for example, right? Because of now computers handle that part, right? You really truly, if we keep the analogy going, you only recording it really in cash book, and computer keeps the ledger running, right? You do actually have ability to see it, and we're gonna make a separate video because I want to talk about trial balance and etc. So we can discuss it. But for now, when you, for example, if you use just regular daily transactions and you record, say vendor payment, etc., right? this is all being recorded. This part is done by computers automatically, right? So I'm gonna make another video about debit and credit, and I might make a different video about trial balance, etc. Right? So thank you very much, and I'll see you soon.